Welcome to Fire and Life Talk, transforming a world one heart at a time.
Hello and welcome to Fire and Life Talk. I am your host, Pastor Gary. We're here for another great episode. But first, I just want to thank our viewers and especially our subscribers from around the world, from India, from the Bahamas, Russia, Vietnam, Turkey, and I cannot forget Bosnia. Those are just some of the few, and especially the United States. But the United States has been lagging. Let's just be for real. So all these other nations that have been showing us some love on the show, subscribing and viewing on a regular basis, we just thank you. We appreciate you. So if anyone out there that's watching for the first time or you've been here before, if you want to know more about us, you can contact us or view us on our website at fireandlife.org. That's fireandlife.org. Again, we appreciate you for tuning in today. Don't forget to like, to share, subscribe, and definitely comment on the show if you have any questions on our upcoming show. So you know how we do it in Proverbs 18:22. It says that he that finds a wife findeth a good thing and obtains favor from the Lord. So I'm going to bring in my good thing. What's up, good thing?
Hello, favored husband.
You know, every time you come in, it just be this light just shining down from heaven on you, I guess. But I'm not going to start nothing.
Okay.
You know, we're doing something really special today.
Yes.
And we have a great show. A couple, Kevin and Marissa Scroggins of Scroggins Insurance. They're going to come and equip us, encourage us. And we're going to dive into all the ins and outs of insurance. How you feel about that?
I feel great about that. A lot of great information.
Yes. We spoke to them before in preparation of the show, and I am looking forward to it. But I tell you what, we have something different today. We have a special guest host. It's Jordan Hintz. She's a special young lady, and Jordan is an accomplished young lady in academics. She gets straight A's. As well as sports, she excels on a national level in track and field. And she does so much more, and we are so proud of her. But we want to bring and welcome in Jordan Hintz.
Hi.
Hey, Jordan.
Hello, Jordan.
How you doing today?
I'm doing great. How are you doing?
Good. I'm doing great. We just want to thank you for taking out your time to be here. We know school is about to start, and I know you're excited about that. So we just thank you for taking time to come onto the show. But for those, I mean, I've already talked a little bit about the academics. I talked a little bit about the sports, but you're here today in a journalist capacity.
Yes.
So can you tell us a little bit more on the journey that you're on?
Right now, I'm really trying to further my pursuit in journalism. So at my school, I participate in the newspaper staff. We're writing newspapers and producing clips for our school.
Great.
That's awesome.
Great. And again, you know, we follow, I ain't gonna say your career. I don't know if that's what you're going to career, but we follow you, of course. And again, we're so proud of you. So Jordan, you're going to participate today. But right now, we're going to take you backstage, and we're going to bring in our guest for today. Again, welcome, Jordan. Thanks for being here.
Welcome.
Thank you.
So we're here for our guests, Kevin and Marissa Scroggins of Scroggins Insurance. I can't wait to get them on here. So, hey, without further ado, I want to introduce to you Kevin and Marissa Scroggins from Scroggins Insurance. Hey, how you doing?
Yeah.
Hey, good morning.
Good
Good morning. How are
Good.
y'all?
Y'all looking good on the screen and everything.
It's Marissa. She's the one who helps it all.
Oh man, you learning. That is a we thank y'all for coming on to the show. And if you would, just share a little bit about yourselves.
Yeah, so I guess I can go first. We're the Scroggins. My name's Kevin. I'll say I grew up in a small town outside of Dallas, a little town called Wiley, Texas. Back in the day, I'm Texas born, but kind of northern raised. Both parents are from the north. Dad's from New York. My mom's from Ohio. Past 10 plus years prior to joining the agency with Marissa, I was in leadership over at Blue Cross Blue. Oh, I don't know if I can say the actual name.
You good. I don't think they mind the
Blue Cross
bug.
Blue Shield. I loved my time there. It's an excellent company. So that's kind of how I got my start in insurance, but it's a different type of insurance. And I really thought that would translate and kind of help me in this space, and it didn't. I was like a fish out of water. I was brand new to everything it felt like, but it's been an incredible journey and a lot of fun. Yeah, I had to be a quick learner.
And Marissa.
So my name is Marissa Scroggins. I am a true Texan. So I was born in Louisville, raised in Plano. My mom is from the Dallas area. She's from Oak Cliff. My dad is from Arkansas. So I have family that way too. Before insurance, I was in recruiting, so human resources. That's actually what I got my degree in from UNT. So really enjoyed my time there. In HR, I thought that was all I was going to be doing. I had tunnel vision. I was like, okay, God, thanks. This is great. I got it. And then God had different plans. So I think it prepared me pretty well, especially from the care side. I think one thing that we're very similar about is we really care about our clients and we really care about what happens to them. And so I think him coming from like the health insurance space and me coming from a recruiting place, they're both spaces in which we have to get to know people, get to know their needs, and then find something that works for them. So.
Yeah, that's great. I appreciate you sharing that because a lot of times our plans that we plan, they don't go that way. But once we, are willing to give God our hearts and just inquire to him what he wants for our lives, we end up going a different direction. But I think what I'm hearing from both of you, that he prepared you, in his own way, individual, and y'all bringing it together. So I want to congratulate you on all your success. Because entrepreneurship is not for everyone and it takes a special skill. But I want to ask you, what motivated you to start your own business and what were some of the challenges that you faced?
So the story goes, so we got married October 11th of 2019. And so, like I mentioned, I was doing my recruiting job. He was doing great in health insurance. And so we kind of had our lanes and we're like, okay, we're married. It's all great. We had a great honeymoon. And then we know how 2020 went. So March of 2020, COVID hit. But that January prior, I'd gotten laid off from my job. The whole department got laid off. And so at that point I was in recruiting. So I'm like, okay, no problem. I know how to find a job. I'm good. And then everything that I'd worked on really kind of dried up at that point. So, and it got so bad that to pass the time, I started playing like a video game. It's called Sims, but my character had gotten laid off from the game, and that never happened.
Yeah, I was like, oh gosh,
that never happened. So once that whole thing happened, Kevin and I, we sat down and we're like, look, maybe we need to try something different. Maybe there's something different out there. I think 2020 forced everybody to kind of take stock and just kind of think about where they're at, in life in general and where they want to be. And so at that point, we're like, well, I mean, maybe we'll try something new. So we talked about entrepreneurship. I'd always kind of had a heart for it, and he did too. We'd had some previous experiences that made us think about it.
Yeah.
And so like most people do, we started out thinking small.
Yes.
So we're thinking, okay, maybe we'll do like a little
vending machine
machine business.
That's what we were initially thinking.
We'll kind of creep into entrepreneurship. And then, yeah, like you mentioned, God was like, yeah, no, just kidding. How about an insurance agency?
Yeah.
So, I got a call at that point from one of the major carriers, and, we kind of talked about it as a family, and just decided to go for it.
Yeah. It was basically, oh, sorry, go ahead.
No, I was gonna say that's a great story, because I think for many of us, we get prepared in life. We have dreams. Other people, family members, parents, whatever, have dreams for us, but we never pay attention to I could say that inner man to say, hey, you should be going this way and desire that. So I applaud you, and I applaud others that step out, and hearing that voice and embracing that passion and just that idea. But it takes a lot of research and a lot of things. And I love the way you overcame the fear, because you said you were thinking small.
Yes.
Yeah. And that's what a lot of us do. And God's plan for us is so much bigger. So, yeah. So I appreciate you actually sharing that, because I know that would help somebody. That helps me.
Yes.
Yeah.
I'm getting convicted right here on live TV.
No, I'm just kidding.
So that's encouraging to me. But I tell you what, can you tell us, give us a brief overview of your insurance business and the types of insurance you offer? We're going to get in detail, but just give us a synopsis or overall view.
So what we offer in the insurance space will be kind of what you call P&C, and then we also provide life and health. We prefer to work on the life side. We do not currently work from a health insurance standpoint. I came from that space. I know that there is a lot more to it. And honestly, it could almost have its own dedicated agency for that. But what we primarily write is life insurance, and then also what I called earlier P&C. So I'm talking your renters policies, your auto, your home policies, things of that nature, and then also commercial.
Yeah.
So we have clients who have their own businesses, and we wrote business insurance for them as well.
Oh wow, that's awesome. You said you're on the corporate level as well.
So
Commercial
commercial.
insurance,
So
yeah.
meaning like if someone owns, typically your mom and pop shops, it could be whether it's a restaurant, maybe an auto mechanic shop, things of that nature, or they may have a studio, art studio, things of that nature.
Okay. I know you mentioned audio. Audio. I know you mentioned auto.
Right.
I know you mentioned auto, and I think Jordan had a question concerning that. We're going to bring Jordan in.
Hi, how are y'all doing?
Good. How are you?
I'm doing well. I had a question because I just got my permit like a couple of days ago, and I was wondering how auto insurance works, or like what type of auto insurance you recommend for new drivers, because I know that can be dangerous and sometimes you need some insurance.
So, do you want me to take that one?
I'll just say a quick bit, and I'll let you get into the details. So I would say biggest thing whenever you're looking and shopping around, be careful with the term full coverage, because in the insurance industry, it's made to sound like it's very objective, but when you really look at it, one agent, what they consider full coverage may not be what another agent considers full coverage. You have to be careful. A lot of times, certain agents will give you the cheapest thing and say, yeah, you have full coverage, because you're not asking the questions, you're not following up and kind of pressing them. So you have to, and that's why what we do is super important, just informing people, making people knowledgeable about what full coverage actually is. And I'll let you go into detail, but it's essentially making sure that you and your vehicle are covered, the other person and their vehicle are covered. If the car needs repairs or if something needs to happen, that you have deductibles attached to it. That's a big thing. Also rental and towing. So those are like the big pieces, I would say.
Yeah, those are the big pieces. And kind of like what Marissa has said, it's different to other agents. and I hate to say it, whenever you're talking to typically a salesperson, not necessarily the owner or maybe a more seasoned individual, they do like to use the term full coverage because, like Marissa said, it kind of removes, questions. All of a sudden, you just feel that you're fully covered. But more often times than not, they're writing you a coverage that they wouldn't keep themselves. They would not carry that level of coverage. And what I'm saying is the state minimum. I would never suggest that for anyone, honestly. The state minimum. There are very few clients that I would say, yeah, that's appropriate. We do have some clients who have a ton of land. They're in a rural area. They don't do much driving at all. So, and I'm not saying someone who lives in the city and you don't do much driving. I'm talking you are out in the country, you don't see someone for miles. That's whenever maybe you can get away with it. But other than that, at least go the next level above. In the state of Texas, it's 50, 150. That's the next level above. The state minimum is actually 30, 60, 25. I do not suggest that for any of our clients. Like whenever someone asks us to write a policy, we do not write that in our agency. Can we legally? Yes, but we do not suggest it. As a new driver, I would suggest that you have accident forgiveness on there. It's not an expensive coverage at all, or at least with the company that we underwrite through. It's not an expensive coverage, but definitely go with that 50, 150 level. You're quite literally almost doubling your coverage without doubling your price, the cost of your vehicle.
Wow.
So, yeah, it protects you significantly more.
Now, you mentioned so much in there, and there's so much information that you guys have for us today. But what I'm hearing, correct me if I'm wrong, is that it's best to really search out your insurance company, understand your agent, and get your insurance tailored to the best coverage that you need.
Yes. And one thing that you actually kind of just mentioned, so not all, and some people don't know this, but not all insurance companies have agents attached to them. Some of them, I would say the top big five, if you're seeing commercials for them, nearly half of them don't have agents attached to the policies. So what you're doing is whenever you're calling in, you're talking to a random person who's creating this policy for you. Unfortunately, they won't really need to I won't say hold true to anything because it is a it's a legal binding contract, but you're not going to have that same person next time you call in. So whenever you have a dedicated agent, you have that individual who, one, is building a relationship with you, and two, like, can actually guide you. So we take on more of a consulting role here in our agency as opposed to just like, sales, like, here, take this and you're good to go. No, we want to make sure that we're talking to you about what it is that you're potentially purchasing, and that you understand it and that you're, equipped to, either keep insurance with us or whenever you go out and about and you're looking around, that you know what you're getting. You always want to have a point of contact if something goes wrong. You don't want to have to talk to a random person each time and, explain the situation each time or anything like that. And also having an agent will help have someone who's on your side. We're like liaisons basically between us and the big company. We're looking after our clients and we're trying to push things along for our client, as opposed to you just being a random number and, number 627 just called in, something like that.
Yeah, and I like that, and I want to encourage the people to give Kevin and Marissa a call. We're going to put their contact information throughout the show. But can you tell us, tell us, because, okay, I'm tuning in, I'm meeting you for the first time, and this is Scroggins Insurance. Do you actually pay the people if they get an accident? No, you actually have a underwriter, if I'm not mistaken.
Yeah, so due to the company that we have a contract with, so we are not the ones who have to pay the claims, which is great because the company that we're
exactly.
Great for everyone.
That's my point I'm getting at.
Yeah.
So can you mention the company that you guys trained under and came in under?
Yeah, we can. So we primarily, and I say primarily because we are our own business, we are our own insurance agency, but we primarily write out of Farmers Insurance.
Okay.
And they have, to keep it plainly, they have billions of dollars to back paying their claims. And we might get into this later, but the difference of, you'll see a lot of the pop-up ads talking about an insurance company that says, hey, we can slash your rates and we can do this or that. But I hate to say it, oftentimes those are startup companies who are bringing in maybe millions, maybe at best. And they're going to have to pay all of their clients, claims. So that's one of those times whenever you start hearing about someone saying, hey, I made a claim and they didn't pay. Well, it's like they might not have had the capital to pay the claim, because they're still in their infancy. They're
Right.
between millions of dollars coming in versus billions of dollars coming in.
Wow.
So that's why some of these larger companies are able to pay so many claims, and you oftentimes have a better claims experience with the larger companies because they have the capital to be able to pay the claims.
Right.
Yeah, that's awesome information. I tell you what, we got a couple of minutes before the break. I did want to mention, or we did want to mention, home insurance. And I think Gina had a great question about home insurance.
Yes, I do. You have your home and everything. How do you know what coverages that you would need for your home?
Well, I would say the biggest one in Texas, you want to make sure you have a decent wind and hail deductible. That's kind of the one that, we all
Especially in North
kind of,
Texas.
especially in the insurance space, that, everyone is keeping an eye on, right? Because of the weather that we get, the hailstorms, the tornadoes, the severe thunderstorms. So I would say that's probably the main one, right? Because most people, whenever they're making a claim on their home policy, it's typically the roof.
Yeah.
It's typically, severe damage to the roof. So I would say that's, especially, if we're talking about Texas or really any other state that's affected by, severe weather, right? We want to make sure that the roof is covered and that, the valuation is, if you can get it, is a replacement cost valuation.
Yes.
So I would say that's, if you don't remember like anything on the home policy side, like that's the biggest one, is just making sure that you have a deductible that you're comfortable with. So that would be the amount that you would pay into the claim to get the claim started. And that's kind of up to you, right? Self-insurance. So how much are you willing to take on as far as the risk, on the deductible? So just making sure that deductible is something that's comfortable for you.
Right.
That's great. Because I guess it's more regional.
Mm-hmm.
Yeah.
Yeah, and you specifically talked about Texas. We have Kevin Scroggins is asking about, can you insure out of state? And since he's asking that question, and we're here to cover auto, home, and life, can you address that? And then we got to take a break. So go ahead.
Yes. Well, so I can say it quickly. So if we're talking PNC, I'm talking once again your auto, your home, your renters, and commercial. We are licensed to write in the state of Texas from a PNC standpoint, but life, we can, create a policy for someone who's outside of the state. I hope that was quick enough.
Yeah, you kind of caught me off guard. Yeah, that was good. I wasn't expecting it to be that quick, but hey, I love all the information. We got to take this quick break. We're going to come back. And when we come back, we're going to talk about life insurance. I got some people that's in the comment room. They're asking about life insurance. We told people that you're just coming on the show. Everyone to know about life insurance. Again, life insurance, I think, could be a whole show, but we're going to dive into it, and we'll be right back.
What's happening, y'all? I don't know if you've ever seen a walking tree. This is actually called a walking tree because these are the roots that come from up high, not down in the ground. They grow into the ground. They're both on both sides of the tree. And if the tree wants to move this way, the roots in the back die, and then it grows out more roots in the front. And the only way the tree can move forward is if the roots in the back die, and it grows more roots in the front, and then the tree moves in that direction. The only way you're going to be able to walk with God and move forward with God is if your roots behind you die. Your old relationships, your old connections, your old views of yourself, they have to die in order for you to move forward. And then you grow new roots in the direction that God wants you to go. The Bible says if anyone's in Christ, the old is gone and the new has come. So let go of these old roots let go of these old ideas, these old relationships, these old perceptions, and start moving forward and reaching out forward to apprehend what Christ has apprehended for you, to become the person He created you to be.
Welcome back to Fire and Life Talk. I'm your host, Pastor Gary. We're having a great, wonderful show today with our special guests, Kevin and Marissa Scroggins of Scroggins Insurance. We have our special guest host, Jordan Hintz, and of course, we have the lovely co-host, Gina. Yay. So in our first segment, we talked about as much as we can about auto insurance and home insurance, but from an overall consensus, we want to talk about life insurance, the importance of life insurance, the aspect of life insurance. So I think, was it Gina, Jordan, you had a question?
Yes, Jordan.
Yes, I do have a question about life insurance. I was wondering why it's important in the first place, and then how many people aren't covered by it, and how can that be bad?
So I'll cover part of that, and then Marissa can cover the other part.
Sure.
So I want to say your first question was why it's important.
Yes. Yeah.
So why it's important is because it's a very, very easy way to perpetuate wealth. It is it's cheap. It's a cheap way to perpetuate wealth. A lot of people don't really think of it that way. You'll think of the policy of maybe just potentially being a burial policy, something like, hey, it puts me in the ground, or maybe it pays off a vehicle or a home. But in reality, you can have $1 million policy and it's tax-free. Everyone out there, keep this in mind. This is tax-free money. And it is very inexpensive. And when I say inexpensive, for example, so looking at my own siblings, I had this conversation with my mom just the other day. But looking at my siblings, for both of them, so for my little brother who is 22 and my sister who's 28, and I'm just giving you all their ages so that you can kind of have an idea, both in pretty, decent health and everything like that, not, superstar athletes or anything like that right now, but good health. For $1 million policy for each one of them, it's under $1,000 for the year, not per month, for the year. For my sister, I want to say it was like 600 something, and then my brother was close to 9. And I mean, that where else can you have that type of money, spend that much, and your family benefit, to that degree?
Yeah. I mean, it's a fraction of the benefit. If you look at it from an investment standpoint, I mean, that's not even, it would take a long time to even get close to touching that in terms of how much money you're putting into it.
Now, one thing I do want to mention is the type of policies that we're talking about were simple term life policies. There's many different types of policies. We can go over those, but if you're just looking for coverage and making sure that, unfortunately, we all pass. Everyone passes even.
Oh, it's promised.
It's promised. It's a when, not a if. So whenever, that time hits, that's whenever those simple term policies, those kick in. Now, there are other types of policies that someone can benefit from while alive. And we can get into that later, but,
Yeah, okay, because
Oh, sorry, go ahead.
Go ahead. Go ahead,
Well,
Marissa.
I was just going to say, just to kind of round it out. So I would say the biggest reason why you would need life insurance, one, it's for your loved ones. You know, do you think that your, parents or your siblings, they probably will not want to work for a while. They'll be missing you and kind of trying to get everything together, trying to wrap everything
Yeah.
up. Most people do not want to work for a while, understandably, right? So not only is it for your loved ones, but depending on the policy you get, it's also for you.
Right.
It can benefit you while you're alive. So I would say it's kind of two different big reasons I would
Right.
say why you would need life insurance.
Yeah, that is great. And there's so many questions going through my head because I know that Gina and I have inquired to you with about auto and home, but we didn't think about life.
Right.
And Kev, you quoted some nice numbers. Now, again, I'm not in that age range, but we're going to definitely engage with you, the two of you, in seeking that out because I had some different avenues. We had some different avenues. So yeah, so we're going to do that. And I want to encourage everyone else that's listening too, whether you're listening live or by tape, give them a call. Again, I keep promising to put that contact information up. I'm getting ready to do that now. But we had a question.
It's from-
Well, it's supposed to show. There we
That's
go.
the one right there.
Yeah.
Can
It says,
you-
can you explain the difference between whole life and term life? And with that question, I want to say, is that the only type of life insurance? There's another one, right?
Yeah,
Right.
well, yeah, there's a couple other, but yeah, so the next
Okay.
big one that you'll typically hear about.
Yeah, if you would, Kev and Marissa, explain all of them and explain the most popular ones as well and the difference between that. Hey, have your way.
Okay, yeah, we can explain the four that we primarily dabble in, I guess you could say, that we like to write. So I would say the two main ones are going to be, you can think of it from a term standpoint and simple whole. So term is almost like renting, and then simple whole is like owning. So term, you're going to have it for a certain amount of time. It's 10, 20, 30 years is typically the time spans that a company will write it for. Within that time period, let's just say you get a 10-year, that premium that you're paying from either a monthly or a yearly standpoint, it remains the same each year. It's the same amount of money each year. And then after you hit that term limit, then it can start to fluctuate again. Whole life is going to be locked in at that price for your whole life. Whole life also has cash attached to it. So you're accruing extra money on top of what we call the death benefit. So basically that initial amount of money, it could be $250,000, $100,000, $1 million. You're accruing money on top of that when it comes to the whole life. Now, those are just those two. The other main types, I guess you could say, are what you would call a burial policy by some. In an insurance space, we call it the graded death benefit, but what we really like to call it is just the instant issues. It's a lot easier to digest, I guess you could say, less morbid. But that's really more so the instant issue policy is going to be a policy that you're writing if someone needs to, just get buried, I guess you
Someone's
could say.
looking for not a large benefit,
Right.
just looking for something very straightforward. It's also a good option for those who've been denied on insurance before for
Yes.
health reasons.
Yes.
This one is great because it's not, if you're eligible, it doesn't require any medical testing.
Right.
So the application is very short. So that's a third option. The fourth option and the beefiest option, especially for those who are looking for something for retirement, those who own a business and like to have some cash, those who have cash and are looking for a tax-free place to put it.
Yes.
There's a product called Index Universal Life. And I'll let you kind of
The
go into
IUL.
that because it's one of your
Oh
favorites.
my, it's yeah. So the IUL is kind of one of those policies that individuals will utilize while they're still alive. So we have clients right now who essentially became their own bank almost, because they've been putting funds into this policy, whether it be for themselves or their children. We've seen it to where it's like, hey, I started this policy for my child whenever they were very young, And now that they're older, I'm gifting this policy to them. Now all of a sudden their child, instead of needing to go to the bank if they're going to buy a car, a home, start their own business, now all of a sudden they have their own money on the side that they can utilize, and they don't have to ask the bank. They are their own bank. They get to borrow their own money. And it always still has that death benefit attached to it as well. So it's almost like, some people have heard the term, buy term, invest the rest. You're essentially doing that with an IUL. You already have that benefit, that death benefit attached to it, but then it's also accruing money because it's attached to the stock market. From a farmer's,
What is that attached to the stock market?
the IUL. So that one is, so that's kind of how you're able to get more gains with the IUL as opposed to just a simple whole life policy. It's a wonderful product.
And that
honestly.
one does have a floor. So
Right, which is
Yes.
excellent. So that's one of the great benefits too. With the stock market, unfortunately, we've seen it, in the past where some of these companies do go under, and your stock goes from being worth $100 to $1 or nothing.
Yeah.
With this product, whatever you put in, that's as low as you're going to go.
Right.
Oftentimes, with most of these companies, they also have a floor when it comes to your returns and a ceiling when it comes to your returns. But at a minimum, and I'm only speaking from the company that we write under, you're not going to lose any more than what you put into the policy. Like that's as low as you go. So if you put in $10, you're at least going to get $10 back. So
Now, I did put up the contact information. We're going to do that again. Do we need to make an appointment if we want to talk on this level?
it is easier. We're always here to answer questions. So for those of you who saw the phone number, that is our office number. We pay for a texting service. So our clients can typically either ask a quick question, or let's just say, heaven forbid, but if they have a claim, they can send over a quick picture as opposed to trying to attach it to an email and then, send it through that way. They can just take a picture. This is what happened. These are this is the aftermath.
Right.
But an appointment would be best because it allows for you to have the mindset of, hey, this is the purpose of it. This is what I'm here for this allotted amount of time. It allows us to kind of already formulate some questions for you.
Mm-hmm.
So it's tailored for you as opposed to it being, just a
What
off
we
the
think
cuff.
you might want.
Right.
Yeah.
Yeah. Jordan, I know you had another question.
Yes, I had a question about what age you suggest to get life insurance, because you don't want to get it too late, but then you don't want to get it too early.
Right. As soon as possible, honestly.
Possible.
And I say that
Yeah.
because it's cheaper. The younger you are, the cheaper your policy will be.
Right. Because even when, we were growing up, things have changed a little bit, but a lot of times you'd hear about grandparents buying up policies for their grandbabies. And when they turn 18, then, they get to pass those policies over to them.
Right.
And that was a brilliant thing to do. And it still is,
Right.
because that is really the best time is to get it when you're younger, especially someone, your age, doing like a whole life or an IUL that has cash attached to it. That gives you the ability to let those things play out over time, because one of the advantages that you have is that you have time.
Right.
So you have the ability to let things really play out and grow and mature in that policy.
And you're not relying on a company's pension or 401k. You're putting that money aside for yourself, and it will be there, like it's there. I think most of us who have been in the corporate space or any space where there's a pension or 401k attached, it's unfortunate, but sometimes those pensions, they evaporate. That person's going to retire and they're going to try to get that money, and it's not there.
Yeah, we're seeing that change.
More
We're
with it
seeing more
because
and
of the
more,
economy.
hearing more and more stories
Right.
about that. Yeah.
Yeah, and you look at your 401k and it's like, oh, hey, I was up, and now it's on them down 5%, than what I was before, and it's like, yeah, unfortunately, that is part of what can happen. But with this, you don't have to really worry
You have
about
more
that. That's
control.
you have more control. It's really neat. But yeah, definitely when you're younger, because once again, you have to keep in mind you're locking in that price as a young person. So if you're paying $50, we're just looking at policies for like my niece and our 5-month-old. If you're paying $20 a month and you're locking that in basically for the rest of your life, hey, that's excellent. But if you go to put it in whenever you're like 70, and it's not too late, it's never too late. But you know,
Okay.
when you're doing it at that point, now you're all of a sudden you're paying exponentially more because I hate to say it, but from an insurance company standpoint, they won't have as much. They're not drawing as much money from you to be able to pay that out. So now all of a sudden, you know, they're paying out on a policy that has only been paid into for maybe 10, 15 years, as opposed to something that was paid into for decades.
Yeah, that's great. I know we had another question. Can you be too old to get life insurance? You answered that, but also too, let's interject a person's health or their lifestyle, like say a policeman, or hey, I like to go skydiving every weekend. You know,
Don't tell us that. No. No. I did see the message come through. So 80 is the cutoff for the company that we write through. Now, I believe there are some other companies out there who would take a little bit older of an age range, but you're going to be paying a lot of money for very little benefit, I guess you could say. But health is a big piece. You don't have to walk around with a six pack or anything like that. That's not the requirements. But you know, just someone who's I'm just saying. Hey, COVID did a number on a lot of us.
I'm like, I've never walked around with a six-pack.
yeah, that was decades ago, man.
Health is a piece, and there are some thresholds and some limits from a health standpoint that can impact eligibility. But in general, as long as someone's in fairly decent health, and when I say decent, I'm really talking just decent health, then yeah, you can get life insurance.
Right. And I would say that's also one of the benefits of working with an agent, especially one that knows about life insurance and enjoys it.
Yes.
We can help you navigate that. So things such as high blood pressure, that won't necessarily disqualify you, but you do want to try to get to a point where if you are taking medications, you're taking it on an as needed basis.
Right.
Because like I said, it won't necessarily disqualify you, but they're going to want to start poking a little bit more into that and kind of figure out what's going on there. So, you know, looking at things like your, you know, daily activity, like I said, medications, if you can get it to a point where it's as needed, that's kind of the best thing to do. And then depending on what it is, like I said,
Right.
we can help you navigate that. But
Right.
yeah, just
Now, Marissa, you mentioned the medicine and all these things. Is there a certain lifestyle meds, and say that you're taking a lot of meds, would you be required to take a physical?
Depends on which one you go, which policy.
Yeah, it depends on which policy. If you're doing the one what we mentioned, that's kind of like a burial policy, like instant issue, that one usually the benefit is pretty low. That one, no, that doesn't require medical testing. All of the others, typically, especially if we're looking at medications, they're going to want to do some medical testing. But the company that we work with, we've actually used them personally, and we actually communicate with the account manager. So that's one thing that we can do is kind of based on what we've talked about, call in, say, hey, you know, what do you think might happen with this one? What do you think, you know, what's your idea on this? And we can kind of help you navigate that process.
And the physical, so I can speak to that real quick too. The physical is not very, it's not really intensive. So you won't feel like you're just getting poked and prodded and things like that. They do draw a little bit of blood. I will say that. But it was a very quick process. I think between Marissa and myself, it took maybe 45 minutes.
Yeah.
And all of that time was just a hold up with me. But
And
other
they'll
than that,
meet
it's
you where you're at.
yeah, wherever you are. So we have,
Yeah.
out in Atlanta, in Louisiana, and other states, and they met them where they are.
Right.
I do see another question coming through, rolling over term and whole life. I'm not.
Yes. So a lot of people do like to do that. So a lot of people will say, okay, whole is great. I like the cash value, but right now, kind of where my budget's at, let's start out with term, and then at the end of the term, let's go ahead and convert that into a whole life policy. So yes, you can do that, and like I mentioned, that's a strategy for some people that they want to get to the cash accumulation eventually, but they at least want something. They at least want some sort of benefit. So they'll say, okay, let me do a term right now, and I'll either go ahead and convert while the policy is still active, or go ahead and convert it once the policy is about to expire at the end of 10, 20, 30 years. So yes, you can.
Yeah. Term is cheaper. And when I say cheaper, it's just less expensive than what the other options are. Just simply because there's not really any frills or thrills attached to it. It's very straightforward. Hey, you bought $1 million policy. That is how much is going to happen. You know, your family's going to receive once that individual passes away. When it comes to the other types of policies, now you're talking cash being involved, and just accumulating on the side. We have some clients who they just stop paying into their policy, their whole life policies, or IULs, and allow the policy because of their cash accumulation. It's built enough wealth to where it pays for itself. And it just keeps, the policy keeps living without them having to add any more funds to it. But yeah, term, if you're on a budget, I would say term is an excellent option because you're going to get a lot of bang for your buck. Once again, there's not extra thrills attached to it, but you're still getting a substantial amount of money attached to it if someone was to pass away, as opposed to the others where it will be a little bit more expensive, but there's also extra things attached to it as well.
That's great information. You guys have a wealth of information, especially really in all areas. But I know we were going to pay more attention to the life today because there's some cultures that, we just don't pay attention to it. I had an insurance man tell me one time, "Why are you worried? You gone. Let the family handle that."
Oh, no.
Yeah.
No. Oh, wow.
And so I think we can have a better ideology about that, and a better perspective about that in these different communities. And one reason is because we're not taught. Right. And again, that's why I appreciate you guys coming on. But I tell you what we're going to do. We have some more questions, but we're going to take a break. Again, this is Fire and Life Talk. We're on, the title today is The Price of Life, and they're giving very valuable information for our life as we know it here on the earth, and even for our loved ones when we leave. I hope I put that right. We just thank you. I want to remind you to like, share, comment. Our comment board is open and people are lighting it up. We appreciate that. I want you to be encouraged. We'll be right back. I sound like I'm closing out, but we'll be right back. Welcome back to Fire and Life Talk. We have our special guests, Kevin and Marissa Scroggins of Scroggins Insurance. And I mean, you guys have been laying it out. I hope our viewers are that's watching now and watching later on are soaking these things up and actually preparing themselves to be prepared for those uncertainties and the certainties, because we are promised to leave this earth one way or another. So I know we have some more questions, and I guess it's Miss Crosby says thank you. So you answered that great.
Sure.
We got Alexander saying great information, and we want to keep this going. What other things that we should know about life insurance and um, I guess the process of doing it and what to look for?
Sure. Well, we'll kind of share a good starting point for those that are kind of unsure of where to go as far as life insurance. But one thing we wanted to touch on that you brought up right before the break was just culture and just some of the things that we've seen. Just wanted to share some stories with the audience, some things that we've seen, and just the importance and how life changing it could be. So. If you want to share the not great, you want to share the not great story?
No,
I'll
I
share.
don't want to share.
I'll share the good one.
Okay, so one of the not well.
I got it.
Yeah.
Okay, so one of the not great. We'll start with that one. So we had a client who their father was a truck driver, and they had done a policy. That benefit was about $250,000, and that would have been shared with him and his mom. They began that policy, started off great, wonderful. I'm not sure quite what happened with everything. They got behind on the payments. They'd been reaching out. At that point, the billing had gone into a grace period. Usually most companies will give you at least 30 days. And if you have an agent that you can access, a lot of times they can help you extend that period. That happened quite a bit, especially during COVID, just trying to help people out in that time. So usually that can be extended if you're communicating with your agent. But unfortunately, we had gotten a call that his dad had passed while truck driving. I had called the company and they said, "I'm so sorry. This is past the grace period." And at that point, he had missed the grace period by 3 days.
72 hours.
72 hours.
And if it was 72 hours sooner, which I mean, obviously, someone passing away is tragic no matter what. But hey, they were 72 hours away from him and his mother receiving $250,000 tax-free.
Wow.
All because of a few payments that were, and when I say a few, I mean, it was a decent amount of payments that were not being, they were not paying into the policy. And we had extended it as much as we could. And that was one of those times where it was really hard. It was just a bad time for everyone, honestly. I mean, everyone involved. It was really sad.
Yeah, that's we can't express that enough. The importance of doing it now. A lot of times we'll wait, and say, well, hey, I'll do it next week. I'll do it whenever I get a chance. But even right here, we got Ms. Crosby is saying, but I would like to schedule a meeting to review what I currently have. Is that possible?
Yeah. Call, text.
Yeah.
And we can definitely set that up. I'll share a more positive story. So I had a mother refer to us. She was out in Oklahoma, I believe Oklahoma City, and she had a daughter who had been having some issues with her brain, and they've been going through different testing. At one point, she had been diagnosed with brain cancer, but at that point, thank goodness, she was started to be get in remission. So she was like, okay, what do I do? How do I navigate this? So I said, okay, let's get this in ASAP. So we were able to kind of get that application in, get everything that she needed, the testing going, and thank goodness she's still in remission. But we were able to get that policy through, and that meant a lot to me because I know that there's a lot of money that goes into doing that, a lot of stress, a lot of time that goes into that. So that was one of those feel good ones for me to know that not only is the daughter taken care of, but the mother is taken care of too. So that was probably one of our most rewarding policies that we got to do.
Yeah. You had mentioned from a cultural, there's communities out there who don't really get life insurance, and it's really unfortunate, honestly. I know sometimes there's talks about how there's an economic inequality amongst communities, and how some areas or some individuals are born with a silver spoon in their mouth and things of that nature. But in reality, life insurance is a great equalizer. It is something that quite literally allows someone to have their future generation have that silver spoon. The silver spoon is there, and it's more accessible than it ever has been in the past. Because once again, life insurance is a cheap way to perpetuate wealth, to push wealth for your family. And once again, depending on what type of policy you receive or purchase, it could be something for yourself as well. But if we're just talking simple term life, it's something easily that a lot of individuals, I mean, in one generation, you can almost completely even the playing field from that standpoint.
Right.
Wow. Because think of it this way. So for us, we pass away, our daughter, receives $1 million+
Mm-hmm.
and that's now all of a sudden that next generation is a millionaire. She's a millionaire. The next generation,
Mm-hmm.
and you can continue doing that. Honestly, someone can use that money to purchase a policy on themselves and just keep it going. And basically, they didn't even have to come up with extra budget, extra funds for that. It's already there. And now all of a sudden, you just created a millionaire family, generational like that.
Well, speaking of that, what if one of our neighbors, we know they live a terrible lifestyle. Can I take insurance out on them?
No,
oh my gosh.
So
it's like you're betting on there. Oh no.
I'm pretty sure I am not the only one that wants to know that.
Where y'all live? I want to make sure I don't live next to y'all,
So I'm glad you mentioned that. So you have to have an insurable interest. So that means that upon that person passing, it has a direct effect on you, typically financially. So that would be a spouse, kids, grandkids, family members, someone that you work with. So if it's your partner, you own a business, it's your partner, that would be what's called key person insurance. Obviously, we hear about staff, right? We hear about companies where it's like, I have it through my job. And it's like, yeah, but as soon as they let you go, you don't have it anymore. Right. So that would be, staff, like you said, key person. So you have to have an insurable interest to be able to take out life insurance on someone.
Okay, great answer.
But I've heard stories. I got stories on that. Yeah. So
I guess I got to be closer to my neighbor, and maybe they'll give us the okay to do it.
Now, I mean, if you get the okay, then yeah, sure, that's different. But no, you definitely need to have an interest.
Okay.
In that.
Great. I tell you what, time flies by, like I told you it would.
Oh, wow.
What would you like our viewers to take away from today's show?
I would say just real quick. So if you're not sure where to start with life insurance, one thing that we'll do with you, if you're like, I'd rather just, sit down with Kevin and Marissa and we'll go through it together, that's fine. Or call. It's something called the DIME analysis. So if you're looking for life insurance and you're not sure where to start, you'll literally write out DIME, right? So D is going to stand for debt. So you're going to write down any outstanding debts outside of the mortgage, kind of calculate that, add that up. Then your I, that's going to be income. So you're going to write down your income, because it would just be for you. It wouldn't be for you and your spouse or you and, whoever, it'd be sole income. So you're going to take that number. And then you're going to do an M. So that's going to stand for your mortgage. So any remaining amount left that needs to be paid off on your mortgage, you're going to write that out. Then your E, that's going to be education. So that would be really relevant, especially if you have children. So you're going to kind of do some figures on, okay, they're more than likely going to want to go to college, maybe start their own business, do their own thing that costs money. So then you're going to need to write that amount down. I would take that number and, especially when it comes to income and education, and probably multiply that number by 10, because you want to make sure that your spouse and your kids are covered for years, right? You don't want to just do it for a year. You want to make sure that they've got some time to plan things out and transition.
I remember talking to
I know, Kim. Yeah, we got about 30 seconds left.
Okay.
I tell you what, we have really enjoyed it. Our viewing audience have enjoyed it. I wasn't able to get to all of the questions, all of the comments, but we just thank everyone for viewing today. Kevin and Marissa, you are welcome to come back anytime. As a matter of fact, we're going to set you up again, okay? Because this was really like an introduction, and it's really integral, and we want to learn more in detail. I want to thank my co-host, Gina, and especially our guest co-host, Jordan, Hicks, joining us today. And continue to say, don't forget to like, subscribe, share, comment, all those things. Go to the website and definitely contact Kevin and Marissa Scroggins, and they can answer all of your questions. So again, see ya.
Thank you for tuning in to Fire and Life Talk, where Jesus is Lord. If you would like more information, visit our website at fireandlife.org.